Welcome to the Tech Blog Writer Podcast, your guide to future tech trends and innovation in a language you understand. Now, over to your host, Neil Hughes.
Welcome back to the Tech Blog Writer Podcast. Now, a man much wiser than me once said, there are two things that are certain in this life: death and taxes. And although we're just emerging from the crypto winter, a quick look on any crypto Telegram, Reddit or Twitter list or any online community will reveal that most people are scratching their heads when it comes to taxes on their crypto gains. So I wanted to find out a little bit more and try and educate both myself and everyone listening and understand what responsibilities these early adopting crypto investors actually have, if of course their coin actually goes to the moon, and are they going to pay their taxes before they rush out and buy depreciating assets such as a Lambo? But seriously, NODE40 is a specialist cryptocurrency reporting software company that has recently unveiled a new tier on their platform designed specifically to cater for certified public accountants, bookkeepers and tax professionals. And the end result is so accounting professionals can now manage their entire cryptocurrency client base with specialised tools tailored for the industry. And I must admit, before talking with Sean on today's podcast, I didn't even realise there was anything out there. So buckle up and hold on tight so I can beam your ears all the way to New York so we can speak with Sean Ryan, CTO at NODE40. So a massive warm welcome to the show, Sean. Can you tell the listeners a little about who you are and what you do?
Yes, thank you for having me. I'm excited to be here today. My name is Sean Ryan, and I'm the Chief Technical Officer of NODE40. NODE40 started back in 2015, and we were doing infrastructure hosting for blockchains, so incentivized nodes, specifically Dash masternodes. And in that year, we were receiving invoices in the form of digital currency. So at the end of the year, when it came time to figure out what our tax liabilities were for the government, we went to our accountant and we said, hey, we have all this digital currency. How do I report my taxes now? And our accountant knew that the cryptocurrencies were property, but that was about it. There wasn't any software in place to kind of calculate gains, losses, income, liabilities like that from using digital currency. So late 2015, early 2016, we started developing an in-house product that would allow us to track our revenue models and expenses that were in digital currency. And that led us to an epiphany. Oh, wow, we really need to build a piece of software because there's nothing out there. And that's really the genesis of the product that we have today. Was NODE40 Balance, creating an avenue for people to understand their digital portfolio and most specifically taxing. Like how do you understand, or how do you wrap your head around what your tax liabilities are? Turns out it's much more nuanced than even I thought back then.
I'm so glad you've brought this subject up because I do hang out on a lot of forums and various online communities, and I speak to different companies every day. And I know that cryptocurrencies are playing a huge part in this digital age now where we're all collaborating with each other seamlessly. But like you said, I mean, before I've spoke to you today, there was nothing else out there or anything that I've seen like this. I mean, do you have any competitors out there at the moment that are doing anything similar?
Sure, yeah. Just like any industry, there's going to be a variety of service providers that address the market need. Our competitors sprung up a little late in the game, but I guess in hindsight, you can look back one day and say it wasn't late. But we were one of the first movers because we had our own need to figure out our own cryptocurrency taxes. But when we surveyed the market at the time, there was a few options out there. But when we attempted to use those providers back in that day, the numbers that these companies were spitting out were wrong, or maybe they weren't wrong, but they didn't make any sense to us. So it wasn't clear where these numbers were originating from, and that's why we decided to bring the whole thing in-house. Once we brought it in-house and calculated what we believed were accurate numbers based on the very limited regulation guidance out there, then we felt as if we had a product that we could actually give to other people as well. So yes, we do have other service providers out in the industry that are attempting to do this, but it is a really tough problem. And until you try to solve the problem yourself, you don't really understand the true scope of the problems that you're trying to solve for.
So as you said, NODE40 is a robust cryptocurrency reporting software that actually integrates directly with many cryptocurrency exchanges out there. But can you tell me a bit more about the kind of problems you solve for your customers? And essentially, who are your customers? Is it the accountants themselves or the actual users?
Yeah, that's a good question. The most of our users boil down to individual traders, but they find us through accountants. So we work with accounting firms that specialize in cryptocurrency, and some accounting firms that don't necessarily specialize in cryptocurrency, but they have clients more and more that have some cryptocurrency trading activities. So that our customer base comes to us generally through accounting firms with this need. But the problems that we solve for, it's transparency, really transparency and peace of mind for individuals and companies that need to kind of verify a tax decision. So even if you take a tax decision in this country, you have to it could be legitimate or it could be there's some gray area. Cryptocurrency is a good example where there's a lot of gray area here. So what we do at NODE40 is we ingest your data. Yes, we link directly to a lot of exchanges, but for exchanges that we don't support natively, we do have a way of ingesting data using a custom schema. So you put your data that you may already have, either whether from exchanges or from past accountant Excel files, you put that into our format, you ingest it into our data. Once we have the data, what we are able to do is paint a picture of all of the activity that you took part in. So if you have multiple wallets, if you have linked to multiple exchanges, source data is scattered throughout a lot of different origins. So what we do is we collate all of that together, paint one very large picture of all of your inputs, outputs, transfers, et cetera. And we're able to say, well, here, based on what you did, based on the trading activity you took part in, these are your gains, these are your losses, and maybe this is your income over here. What we then produce are financial reports that you would hand off to your accountant or you would file directly with the IRS. The biggest value we add here is that we give you back all the data that you gave to us. So we don't just simply say, well, you owe $30. We say you owe $30, and here's how we came up with that. We give you all the raw data that we use to calculate those values, and this becomes really important. If you're ever audited, you need to be able to produce an explanation as to how you came up with these numbers, and that's really what we specialize in. But beyond that, there are two types of ways of transacting digital currency. A lot of people don't necessarily understand it. On blockchain accounting is when you have your own custody wallet, like you have a core wallet. In the early days, you were running a full Bitcoin node right on your computer, and they had wallet software that would run on top of that. Nobody owns those funds except for you. That's not on an exchange. That's not in some other third-party custodian. That's yours and yours alone. You can track all that activity on the blockchain. So when you receive digital currency, we can see that on the blockchain. When you dispose of it, we can see that on the blockchain. But when you start getting into the exchange level area, so if you transfer to, say, Coinbase, and then on Coinbase you send to another Coinbase user, or you buy Ethereum with Bitcoin on Coinbase, what's going to happen is Coinbase doesn't actually put those on the blockchain. Those are kind of on Coinbase's book. So there's no record on a distributed ledger that you can point to understand that. So what we do is we track all of that activity, and we're able to identify when you move from a wallet to an exchange, from an exchange to another exchange. We assign cost basis to the first time you receive digital currency. And then as you move it around and finally dispose of it, we carry forward that cost basis over and over and over again until you finally dispose of the digital currency. That right there is a really difficult problem to solve because they don't always link up nicely. And we're able to do that. So I know that's a kind of a long answer. I mean, there's a number of other things that we support, but those are the big ones. And then we make the data that you give to us useful. We turn that into information through reports. So we have things like FBAR and FATCA. In this country, we have foreign asset reporting requirements. So if you had a certain value in exchanges throughout any time of the year over a certain threshold, you have to report that to either Department of Treasury or the IRS in our case. That information we just give that back to the user in a format that they can even pass off to their accountants or at least just keep for their own records. These are really, really important aspects of digital currency accounting.
Now, I suspect that in the last 18 months, many crypto investors have actually lost more than they've actually made. But with the crypto winter appearing to be thawing, many are going to be looking to recoup their losses. So can you tell me a little bit more about how members of that blockchain community transacting in, trading in, or mining digital currency have likely triggered a taxable event that they're probably completely unaware of, or even know how to properly disclose these transactions to the government? Can you tell me a little bit more about that?
Yeah, the first most important thing to understand is what makes a transaction taxable or not. So whenever you're receiving digital currency as a compensation, whether that's for salary or if you sold a good and you receive digital currency in return, that's going to be considered income. And but you can move it all around within your various wallets onto exchanges, from exchanges to exchange. Those transfers are not taxable. What is taxable is that when you finally dispose of it. So when you dispose of digital currency, whether you're selling it or you're giving it to a merchant for in return for a good or service, you're disposing of digital currency, and those are taxable events, and you have to understand how much that owes. That's actually not a very easy problem to solve. You would think a lot of people had a lot of losses in the last 18 months, but I don't necessarily agree with that. Our data doesn't necessarily show from our customer base that that's really what's happening. If you got into digital currency at all-time highs, yes. If you sold or disposed of it in any way, yes, you have a taxable event. You probably have a loss involved. But a lot of people got in before the run-up in 2017. So the market is still much higher than it was back in 2015 and 16. And of course, early 2017. So if you got in then, you're still way, way up. Being able to understand how to dispose of pieces of your digital currency to either minimize a loss or in some cases maximize a loss. That's a critical component of understanding digital currency trading. It's a problem when people are they fail to understand the true implications of what a trade, how it impacts them on the tax basis. One very important piece is when you're transferring from one digital currency to another type of digital currency. That's also a taxable event, at least in this country. So when you're buying Ethereum with Bitcoin, you're essentially disposing of Bitcoin. Now, there's a lot of debate going on in our country with like-kind exchanges. So prior to 2018, so 2017 and beyond, and earlier, the way a section of our code, our tax code, is actually Section 1031, was written was kind of ambiguous. Was it okay for you to transfer Bitcoin to Ethereum? And was that considered to be a like kind? So one asset class going to another asset class, basically the same thing. It's just a different version of digital currency, but it's all digital currency. Is that a taxable event or not? There are people out there that say, yes, that was a taxable event. There are people out there that say, no, it was not a taxable event. You taking that position is a very important position to back up. If you feel as if you can take advantage of things like that, then it's important that you have data to back that up. And we do report that. What NODE40 doesn't do is we don't say, no, that wasn't a like kind event, or yes, that was a like kind. What we do is we say, here's all your data. Do you want to consider trades prior to 2018 as like kind, meaning they do not have a taxable consequence, and we transfer cost basis from one currency to another? If you opt in, then we calculate based on what you're asking us to do. So we're not in the business of providing necessarily tax advice or saying this is how to do it. What we do is give you as many options as possible. And you, with that position, we will back up our calculations based on what you want to do. So there's a lot of holders out there, right? Hodlers, as they say, that when just because you acquire digital currency at a high value and it's low value now, well, they're not necessarily selling. So they're not necessarily taking a loss either.
And I think that things are going to get even murkier because obviously Coinbase are going to be releasing a new debit card where people can just spend their digital currencies like fiat. I mean, how does that work, especially from a taxable point of view? Because Coinbase are almost encouraging people to, yes, go out and spend your Ripple, your Litecoin, your Bitcoin in your local high street store. Look at me, I can buy a meal, I can buy a beer with my crypto card. But there are implications with that, aren't there?
There are. This is one of the big problems I see in the industry now is that there's not a lot of answers to these questions. If I buy a cup of coffee with my Bitcoin, do I have to realize a gain or a loss on that? My position personally is that, yeah, you do, because nobody has said that you don't. And the only rules that we have in place now for us is the cryptocurrency is property. And therefore, if it's property and you're disposing of pieces of property, you have a cost basis on that property, and then you have a value when you dispose of it. So the difference is going to be a loss or gain. You have to report that. It doesn't necessarily make it impossible. And in fact, I would argue that it doesn't even make it really burdensome. It's just a matter of understanding that this is something that you have to that you have to go through. So if you're taking a debit card and you're spending your Bitcoin or your Ripple or whatever on it, there is a record of those transactions. And we know what the cost basis was. We know what the value was at the time of the trade. Well, in this case, it wasn't a trade, it was a purchase. So we know what those values are. It's just simple math. But getting the population to understand that you have to have those records, that's really that's the biggest obstacle I see. Now there is legislation in our country making its way through committee and eventually maybe be voted on that would exempt certain purchases below certain thresholds for certain reasons. So buying coffee, that's always the one I go to, right? Yeah. Could be exempt so long as it's under $600 is what they're proposing here. That does not exempt you from the responsibility of tracking your purchases, because if, for instance, a cup of coffee is exempt because it's under $600, you still have to say that this particular trade was exempt because it was under a certain threshold. It also, the legislation, the way it's being written now, is also, you can't just cash out. If you cash out, it's a gain or loss regardless of how small it was. But if you're trading your digital currency for a good or a service under that $600 threshold, then it's not taxable. The gains aren't taxable, but you still have to track that this was an event and I qualify as not being taxable. So it doesn't change the reporting requirements, no matter how simple it appears. It still is, I'd say, a burden. It's still a responsibility of investors, traders, or just consumers to track this information, similar to how you would track your credit card purchases.
Now, tax rules, of course, will vary from country to country. And I know, for example, the US and the UK are quite different. So do you serve the entire global community, or is it just in specific regions at the moment?
Well, primarily it's the US because that's where we're located. And that was the need of our own personal company and us as individuals. We do track 10 other fiat currencies, so we intend to expand to support various most popular regions throughout the world. But we do have a lot of customers from outside of the US, even though, including the UK, believe it or not, even though you have a kind of a shared pooling model in the UK now, it doesn't change people's desire to understand what their current portfolio value is, what their cost bases are. So our system isn't not just about tax; it's really about cost basis. So understanding that is still critical to even the UK's rules. So I think that's why we're seeing more and more customers come to us from outside of the US, because it's what we do is we ingest data, process that data, and paint a picture of it. So it doesn't matter what your taxation rules are, you still have a historical activity trail that you want to see. You either want it visualized, you want it exported so you can import it somewhere else. So to answer that question, yeah, we support all regions in the sense that we paint a picture of what you did. Now, generating tax forms for specific regions, we really just focus on the US right now. But it won't be a very heavy lift for us to move into supporting other regions, and that is on our roadmap.
I'm curious, what are the biggest myths that you see from the online community that you regularly hear about? There's got to be a few out there.
Oh, yeah. I guess the biggest one is you don't have to pay taxes. Listen, I understand that there are philosophical differences between people who think taxes are okay, people who think taxes are theft. I'm not about to get into a debate on whether taxes are legit or not. Yeah. But what I can tell you is, as of now, you have to pay taxes. So whether you want to abide by those rules or not, I mean, people are always going to do what people want to do, right? They're going to lie on their taxes, or they're not going to report them. What we're trying to do is take what are the rules right now. Let's assume everybody's playing by them. Then I'm building an application to enforce those rules, or at least allow you to understand your activity in terms of those rules. That's probably the biggest one. The other biggest, I guess, a tie for that one is biggest misconception is people have a lot of answers that they feel very strongly about. So, for instance, well, I brought up the like-kind example earlier. Does that apply or doesn't apply? There isn't an answer. Like, the government hasn't said it does or doesn't apply. So anyone that says it does apply or anyone that says it doesn't apply is, well, that's their opinion, and that's fine. They can take that position. You just have to back it up with with data, and that's fine. But it still is just an opinion. It still is your position. Airdrops and forks, are they valued at how are you valuing them? Are you going to pay gains on 100% of 100% of your gains, or are you going to assume that when you received airdrop tokens or forked currencies that it was valued at the same as some other similar currency? Like, there has to be an answer eventually, but there isn't one now. So the way I personally view this, when I receive airdrops or forked currencies, is I assume a cost basis of 0. So when I dispose of it, I'm paying 100% gains. But that's my personal position. It doesn't mean I'm right. It means that if I'm fair, if I'm reasonable, and I'm consistent, then I'll probably find myself in a defensible position. But since the government has not come out and answered these questions, you can't very well say that it is one way or it is another way. This is what I'm seeing a lot out there, very strong opinions. Wash rules are another example. When you dispose of one currency and then buy it back immediately within 30 days, in the security world, that's a wash rule, and you can't take a gain or a loss on that. It operates differently on the tax side. But with digital currency, since it's not a security, we think, then does the wash rule apply? Some people out there will say it doesn't apply, or some people will say it does apply. These are opinions, and they may end up being correct. But right now, I can tell you the government has not come out and said that this does or doesn't apply. So we got to be careful when you hear from tax experts or even people like me, anyone listening to your podcast. A lot of what I'm saying is very, very reasonable, but you have to be careful to read the actual legislation to understand what the rules are before you take a very hard and fast position.
Man, what a minefield that is. So I've got to ask then, how does it work? I mean, can you talk me through how a bookkeeper or a crypto enthusiast, how they can actually get up and running with NODE40 and what to expect?
Yeah, so because we're seeing more organizations like accounting firms get involved, what we've done is we've modified our system to allow accountants to kind of create an account in our system, and then they can buy seats for their clients, and they can either give those seats to their clients at for free, which is fine, but they'll be able to log into our system and choose. They'll be able to select any one of their clients that are listed within our system that they can add and remove them as they feel fit. And then they click on that person, that client that they want to operate on, and then the accountants can operate on their behalf, or optionally, you can have clients sign up, or you as an individual can sign up and just import all your data, do your own thing. At any point, it's kind of like a QuickBooks model where you sign up for an account and you can give access to your accountant, or your accountant can give you access to their portfolio within the system. It's a very common model. We wanted to be in line with what most people are familiar with to begin with. We don't want to create some new methodology. We want to stay as consistent with accounting software as possible.
And for bookkeepers, do you think it's only a matter of time before every client's going to come to them with crypto transactions? And do you think they're prepared for what's coming?
The bookkeepers and accountants are they're aware. I want to say they're prepared. Being prepared just means being aware and then knowing what solutions like NODE40 exist, so they can provide that. So as an accountant, you would subscribe to QuickBooks. Well, as an accountant, you're eventually going to need to subscribe also to NODE40 or something like NODE40. So, but to answer the question, I think maybe I think there's still a lot of cash only businesses out there that don't even take credit cards. So to say that digital currency is kind of replace the financial system, I think it's going to maybe augment it and complement it, but I don't think there's ever going to be a full replacement. And I'm sure I'm going to get hate mail for that one. But I think you got to be reasonable. I mean, there's sensationalist claims out there, but realistically, I think you're going to see more and more. It's going to start to trickle in, and then as it trickles in, regardless of whether your client or you have one transaction or a million transaction, if you just have that one transaction, you still have to understand it. You still have to figure out, how do I assign basis to it? How do I track it? Because when I do have to pay tax on it, then I need to explain how I came up with that number. So yes, I see an absolute need for a software package like this, and it is a matter of time before every bookkeeper and every accountant interacts on some level, whether it's tiny or all in on digital currency.
And do you think the wild, wild west days of the crypto are coming to an end now? And what do you think the future looks like with that inevitable regulation coming? Oh
man, I hope they're coming to an end. It's too stressful.
Yeah.
I think it's hard. The arguments that I hear from friends and professional colleagues is that Bitcoin's a scam. It won't last. It's the same old tired stories. People like to sensationalize bad behavior because it's more interesting, right? So you hear a lot of news stories about theft and Ponzi schemes and all the things that people are doing bad with digital currency. Nobody's going to write an article on it. Hey, I just paid my taxes. Great. Nobody cares. So I think there are far more good actors in the space than there are bad actors. But because we are kind of in that Wild West days, and more people are understanding digital currency, or at least have heard of digital currency, especially because of the 2017 run up. Yeah, I mean, are they coming to an end? Probably. I mean, they eventually do have to end. As soon as we have governments codifying rules around how to interact with it, then yes. However, I do think we're going to see another spike of bad behavior as soon as legislation and regulation is made clear. You're going to have people that are running afoul of that, even accidentally. So we're going to see news stories, I believe, when we finally see definitive answers to a lot of these questions. There's probably going to be organizations suing these regulators saying this is unreasonable. So once that settles down, probably in another 2 years, it'll just be another form of payment, another investment, another financial asset class in the world. And I truly believe it's going to thrive, because it's not just an idea. It has utility. And this is what I think people are finally understanding.
So as for NODE40 then, I mean, what excites you about that road ahead and the role that you're going to be playing in this new digital future?
Yeah, I'm excited that I'm part of an organization that's helping to bring that legitimacy and professionalism to the industry. It's what the industry needs to survive sooner. It's going to survive regardless, but to get more people to buy into the idea, to buy into the technology, you need a support structure in place that adds legitimacy and helps people stay in, within the confines of the law. That's where my organization sits in this. Like, we don't develop blockchain applications. What we do is we support the industry, and the more supporting platforms like ours that pop up, it's just better for the industry. And I'm really excited to be a part of that.
So for anyone listening that wants to find out more information about what you're doing at NODE40, how it could possibly help them, what's the best way of finding you online, or maybe even contact a member of your team if they've got any further questions?
Yeah, your podcast, of course. I would say, node40.com. That's our main website. And then even we are directly reachable by telephone, in fact, by email. And we have a whole support base. So if you go to node40.com, you'll be able to give us a call. You'll be able to chat with us right on the website and send us support tickets. This is what makes us successful. We're able to talk directly to customers. We love talking to them.
Well, I think when it comes to crypto and taxes, at the moment, there's a lot of scratching heads, a lot of confusion. And like you said earlier in the episode there, a lot of conflicting opinions. So yes. I can't thank you enough for coming on the show today, busting a few myths and talking about the best way forward and how ultimately to put yourself in a defensible position when the inevitable happens. But
that's right.
More than anything, just a big thank you for coming on.
And thank you very much for having me.
After chatting with Sean there, two things really caught my attention. One, members of the blockchain community transacting in, trading in, mining in digital currency have probably triggered a taxable event and can be blissfully unaware of how to properly disclose these transactions to their government. And now, of course, we've got Coinbase releasing their own debit card where people are going to just spend their cryptocurrency like it's fiat currency. Again, people aren't thinking about tax. And there is arguments around whether they should or whether they shouldn't, but they're all just opinions at the moment with no clear guidelines in place. And two, those that are proactive and seek help from accountants are probably going to be greeted by a blank look and an admission that, hey, I don't know too much about that world. And yes, these are emerging technologies, and we're only just beginning to see how this will create a few problems. But make no mistake, the second you go into a car showroom to buy a shiny new Lambo and a personalised HODL number plate, you're going to appear on Uncle Sam's radar, who's going to want his slice of the pie. And for those reasons alone, we need companies like NODE40. So if you're an accountant, do you have any additional feedback around the subject of crypto and taxes? Please, I'd love for you to share your insights, your opinions, by just emailing me at techblogwriter@outlook.com. And of course, you can get me on Twitter at Neil C. Hughes, Instagram at Neil C. Hughes, and all the usual places. So a big thank you to Sean for coming on today and explaining how you can put yourself in a defensible position when it comes to crypto and taxes. But more than anything, of course, a big thank you to each and every one of you that tune into this Daily Tech Podcast. But until next time, don't be a stranger.
Thanks for listening to the Tech Blog Writer Podcast. Until next time, remember, technology is best when it brings people together.